What if I told you Bitcoin's next explosive move isn't just a guess? It's already being written into the numbers. While the world is distracted by headlines, deep under the surface, powerful forces are aligning to ignite the biggest Bitcoin rally we've seen in years. Let's uncover the real reason. 1. The hidden cycle that never fails. Bitcoin operates in cycles, and history shows they repeat almost perfectly every 4 years. These cycles are tied to a single event called the halving, when Bitcoin's block rewards are cut in half. This happens roughly every 4 years, reducing the new supply of Bitcoin entering circulation. Here's why it matters. When supply drops but demand stays the same or increases, prices naturally rise. Every halving in Bitcoin's history has led to a massive bull run. In 2012, 2016, and 2020. And guess what? The next phase of this cycle is here again. After the 2024 halving, the countdown began. Historically, Bitcoin explodes 12 to 18 months after each halving. That means we are entering the exact window where major rallies have always started. This isn't speculation. It's pattern, math, and psychology working together. 2. Institutional money is quietly flooding in. In the early days, Bitcoin was driven by retail investors, individuals buying small amounts. But now, the big money is here. We're talking about financial giants like BlackRock, Fidelity, and Franklin Templeton, who manage trillions of dollars. BlackRock's Bitcoin ETF alone has changed the game. Institutional investors, who were once skeptical, are now treating Bitcoin as a legitimate asset class. With ETFs, they can easily invest billions without worrying about wallets or private keys. This wave of institutional adoption means one thing: massive capital inflows. When institutions buy, they don't buy a few coins. They buy in bulk, and they hold long-term. The result? A supply shock. Fewer Bitcoins available for sale and greater demand. That's an explosive setup waiting to happen. 3. The supply shock. Fewer Bitcoins than ever. Let's talk numbers. Out of the total 21 million Bitcoins that will ever exist, over 19.7 million have already been mined. But here's the kicker. Studies show that nearly 4 million Bitcoins are lost forever due to lost wallets and forgotten keys. That means the real circulating supply is much lower than most people think. Combine this with institutions holding large amounts and the upcoming demand surge, and we're staring at one of the tightest supply scenarios in Bitcoin's history. This is what analysts call a supply squeeze. When new investors rush in during the next bull wave, there simply won't be enough Bitcoin to go around. Prices won't just rise, they'll skyrocket as demand chases scarcity. 4. Global economic shifts are fueling the fire. Bitcoin was born out of a financial crisis, and once again, global markets are shaking. Currencies are weakening, inflation remains high, and governments continue printing money to manage debt. In times like these, investors search for assets that can't be printed or manipulated, and Bitcoin is exactly that. It's borderless, decentralized, and limited in supply. Central banks are also exploring digital currencies, CBDCs, which ironically are driving people toward Bitcoin. Why? Because Bitcoin is the opposite. It's freedom money. No bank, government, or institution can freeze it or control it. This growing mistrust in traditional finance is quietly driving millions of people toward Bitcoin, not just as an investment, but as a financial escape plan. The more uncertainty grows globally, the stronger Bitcoin becomes. 5. The technology behind Bitcoin is evolving. While price dominates headlines, the Bitcoin ecosystem itself is advancing faster than ever. New developments like the Lightning Network have made Bitcoin transactions faster and cheaper. Platforms are building Bitcoin Layer 2 solutions, and major payment processors like PayPal and Cash App now integrate Bitcoin directly. Even governments are joining the movement. El Salvador made Bitcoin legal tender, and several other countries are exploring similar steps. All of this means that Bitcoin isn't just an investment anymore, it's becoming an infrastructure. The more useful it becomes, the higher its long-term value potential. 6. Smart money is accumulating silently. One of the clearest signs of a coming explosion is what's happening on-chain, the actual blockchain data. Analysts are tracking wallets that belong to long-term holders, and these wallets are quietly accumulating Bitcoin again. When long-term holders start buying, they're not planning to sell next week. They're anticipating the next big wave. It's the calm before the storm. While the public is distracted, the smart money is preparing for what's next. 7. The next bull run could be bigger than ever. Here's where things get exciting. If we look at Bitcoin's past cycles, each bull run has produced new all-time highs, often 4 to 5 times higher than the previous one. After the 2020 halving, Bitcoin exploded from $9,000 to over $69,000. If a similar multiple occurs again, we could be looking at Bitcoin reaching anywhere from $150,000 to $250,000 in the next major cycle. The ingredients are all there. It's only a matter of time before they ignite. 8. Why most people will miss it. Here's the ironic part. Even though the signs are crystal clear, most people will ignore them until it's too late. That's the psychology of markets. During accumulation phases, Bitcoin feels boring. Media attention fades, people lose interest, and prices move sideways. But that's when the biggest investors build their positions. By the time headlines scream, "Bitcoin is back," the smart money will already be deep in profit. 9. The final catalyst. The Bitcoin ETF effect. Let's not underestimate this. The Bitcoin spot ETFs are a historic moment. They allow trillions of dollars in managed funds to gain exposure to Bitcoin for the first time. When ETFs were introduced for gold back in 2004, gold prices surged by nearly 400% over the next few years. Bitcoin could follow a similar trajectory. Every week, millions are flowing into these ETFs, and as adoption grows, this demand will multiply. Conclusion. The real reason isn't just one event. It's the convergence of multiple unstoppable forces. The predictable Bitcoin halving cycle, massive institutional adoption through ETFSA, tightening supply and on-chain accumulation, global economic uncertainty, driving demand for hard assets, rapid Bitcoin technology growth. If you found this video helpful, hit that like button, subscribe for more crypto insights, and drop a comment below. Where do you think Bitcoin will go next? $100,000? $250,000? Or even higher? Let's talk in the comments. Because one thing's for sure, the next Bitcoin explosion isn't a matter of if, it's a matter of when.